Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. We got a lot to cover today. We're going to take a look at this executive order. It's going to go into effect by February of 2026, and it could drive quite a bit of cash into silver as well as gold and some other commodities. We'll take a look at the most recent silver chart. Notably, this is a 4-hour chart. Notably, silver did put in a new record intraday all-time high price just a few hours ago, above 59.59 for A3. So some very significant action in the silver space. We need to look at this chart and some other charts too. Gold, the miners, because there's a very interesting pattern that is setting up. And I'll explain to you why I remain extremely bullish from a technical standpoint on these charts. Now, if you're interested in stacking some physical silver, make sure you check this out. Introducing the first ever 5-ounce silver maple leaf coin from the Royal Canadian Mint. A historic release with an iconic design that is available in a stunning OZA format for the first time ever. Don't miss your chance to own a piece of minting history available exclusively at sdbullion.com. All right, so let me first show you these charts. These were sent out in my free e-newsletter, the Stacker Report. You can sign up for that with the link in the description, completely 100% free. Were sent out a couple days ago, and I highlighted the fact that we just had this big breakout in silver, and now we're seeing a small consolidation here. It's almost like a fractal, right? You can see this ascending triangle that silver broke out of. Then it was in a tiny ascending triangle. Same story in gold. Gold broke out of this symmetrical triangle, broke out to the upside, and then it was forming another smaller symmetrical triangle. So this is a trend that we are seeing on several of the charts right now. Now that ascending triangle, that small one in silver, kind of broke down and it turned into a flag, but still it's a very bullish consolidation pattern here. It's a flag. It's a continuation pattern. This is how the gold and silver market have been functioning throughout this bull market. You get a breakout to the upside, a consolidation, and then further breakouts to the upside. Now, interestingly, silver tried to break out of this flag today. We had a failed breakout, but like I said, silver did rise to a record all-time high price of $59.33. And there are several reasons why I think even at this record high, silver is still very cheap. We'll get into several of them in this video, but right now, silver back into the consolidation pattern. But you know what this does tell us? It does tell us that there are buyers for silver above $59. And a fade breakout often sets you up for a stronger breakout to the upside out of this continuation pattern moving forward. Now, like I said, we're seeing this sort of fractal thing with the consolidation. You get a breakout. So it's like a breakout within a breakout, right? You get a breakout in gold. This is the gold chart from this triangle. Then you get another triangle that forms. Now, gold also had a failed breakout from this triangle today. You can see it broke out to about 42.60, and then it has fallen back within that range. So again, this triangle, I think, remains. It was a false breakout, means that we're probably going to see the resolution of this triangle very soon. I think we'll get a successful breakout of this, probably to new record all-time highs in gold. And don't worry, we're going to get to that executive order story with Trump in just a moment because it's important. But let me just, paint the picture here for you, the backdrop against which this executive order is going to hit. And it's an incredibly bullish one from a technical standpoint. Now let's look at the miners. So we've got SALJ. This is the Junior Silver Miners ETF. Same story. We had a bull flag that was forming for a while there, dating back to October. And then we broke out from that. So you got your flagpole here, and it's the same pattern, right? It's a descending flag, a classic consolidation pattern, a bull market, a continuation pattern. SALJ false breakout out of that today, fell back within the range. So, you're probably starting to see a pattern here. Same story in the GDX, the gold miners, senior gold miners ETF. We had a bull flag, broke out of that. Then we had this triangle consolidation breakout attempt today, fell back within the range. That triangle is going to resume or come to a conclusion very soon and likely break out to the upside. So the technical picture is very positive here. Now let's get to the executive order. So this is titled Democratizing Access to Alternative Assets for 401k Investors, who actually signed by President Trump back on August 7th, Now, this is going to likely lead to a lot of money flowing into the silver space. At least this executive order is going to create the possibility for that. So what does this executive order do? Well, it doesn't do anything in terms of regulations on its own. What it is it's a directive towards the Department of Labor to reform regulations on four vehicles to allow them to include what is listed here as alternative assets. It says it's the policy of the United States that every American preparing for retirement should have access to funds that include investments in alternative assets. When the relevant plan fiduciary determines that such access provides an appropriate opportunity for plan participants and beneficiaries to enhance their net risk-adjusted returns on their retirement assets. And what does alternative asset mean? Well, it means several things, but on the list is direct and indirect investments in commodities, which includes gold and silver. And it sets a 180-day time limit for the Department of Labor to investigate ways to reform the legislation that regulates 401ks. So this doesn't guarantee that everybody's 401k is going to be able to buy, gold and silver bars, but it likely will open some doors for at least some paper derivative of silver to be included in these 401k plans under some fiduciaries. If the fiduciary determines that it's important for the investor to be able to have access to that. So I don't know exactly what way, shape, or form this is going to impact the precious metals market, but by February 2026, which is when that 180-day time limit expires, we are likely to see some changes to the regulations on, and if even a tiny fraction of that flows into silver, it could have a huge impact on the price. Now, again, the technical picture when we zoom out for the metals is already extremely positive, right? I mean, there's tons of technical suggestions here or indicators that we are in the very early phases of a major bull market. You got this giant cup and handle when you zoom out on silver's 3 months chart, and clearly it is breaking out from that level. Now we are seeing a definitive breakout to new record all-time nominal prices, which suggests that we are going to head much higher from here, and it's kind of coinciding with a lot of these factors. We've also got the Fed about to unleash a surge of liquidity. We'll take a look at that in just a moment. But let's also revisit some of these other charts, which have evolved since we've looked at them last. This is the gold to silver ratio. You can see this peaked out back in earlier in 2025 over. If you bought silver, then you've been doing pretty well for yourself, because since the breakdown from this bear flag, gold to silver ratio has been in a strong decline. You can kind of see the downtrend here and denoted by this green line that I just drew. And what we recently had was a consolidation in the downtrend, this descending triangle, a very bearish chart formation. And then the ratio broke down out of that. This was corresponding to silver's breakout from that ascending weak triangle. This breakout here kind of coinciding with the gold to silver ratio breaking down. What's it doing right now? Well, it's consolidating. This is the gold to silver ratio. So we're just going to look at the daily chart here, but what you're seeing here is a similar consolidation that you're seeing in the metals, except it's a consolidation getting ready to break further to the downside as the price of silver outperforms the price of gold. You see this ratio decline. So again, this is also just consolidating here, getting ready for a larger move down. This is the M2 money supply. We're going to look at this on the 1 mon chart. M2 money supply versus the silver price, which you can see just breached a critical line of support. If this were to reach, say, the same level that it reached in 1980, you would need more than a 10x increase in the silver price from here. You would need about $700 silver to get to the same M2 to silver price ratio. And that's because, in 1980, silver hit 50, and it dropped down to this ratio here. But today, there's been so much fiat money. There's fiat currency, I should say, that has been created since 1980 that in order to reach that same ratio, you would need an astronomically higher silver price. I'm not saying we're going to get $700 silver, but I do think triple-digit silver is easily achievable. And all you need to do is just get down to the same level that we had in 2011, and you would need the silver price to just about double from here to achieve that. So that at least puts you over $100. So I think $100 silver is inevitable, probably much higher than that. not financial advice, just my analysis of things here. I mean, there's all these factors, right? Like more money from 401ks flowing into the precious metals market. Okay, that is one factor. What's another factor? Well, there's going to be more fiat currency. They're printing more fiat currency. There's even going to be more of this currency that's currently sitting in 401ks, which is now going to be able to access silver in some way. And it's more fiat currency chasing actually a shrinking physical silver market. This is from the Silver Institute. Silver market is on course for fifth successive structural market deficit. That's the fifth annual deficit. This year, we are going to see 95 million ounce deficit in silver. That means more silver is being consumed by industry, by AI data centers, by electronics, by solar panels, you name it. Silver is the most useful element pretty much on the whole periodic table. It's the most conductive of electricity. It's the most conductive of heat. It's the most reflective. It's got a lot of very useful properties. So there's a lot of silver that's being consumed right now. In order to bring production up, we're going to need much higher prices at a sustained level because, bringing on a new silver mine takes something like a decade. There's all this regulatory hurdles you got to go through. You got to actually find the stuff in the ground. You got to dig it up. It's not too easy to get silver out of the ground. And so right now, not as much is coming out of the ground as is being consumed and put into landfills and stuff in these small unreverberable amounts. And here's a chart from Bloomberg, which shows you, 2025, 2024, 2023, 2020, 2021, all deficits, pretty big deficits too. I mean, we're almost at 250 million ounce deficit there. And I suspect that this deficit, unless we get much higher prices for a sustained level, could continue to increase because even if we do bring more silver online, even if we do recover more from recycling, there's going to be a lot of silver consumed in what is coming with the AI data. Center boom with developing economies, electrifying their grid, building out their grid. You need a lot of silver for that. You need solder. We need solar panels, right? I think that we're going to continue burning fossil fuels for a long time, but there will be a continued push as well. And that could depend how the political arena goes, right? For more of alternative energy sources, and they consume a lot of silver. So the deficit is going to persist. And I mentioned that they're creating a lot of fiat currency. Let's talk about what's coming with the Fed. Right now, the odds of a rate cut at the December 10th FOMC meeting is right around the corner. These have risen to, and they're definitely going to cut. So let's talk about some of the data that relates to the Fed cut and what the Fed is looking at. Well, we just got core inflation, which came out lower than expected, 2%. That's the personal consumption expenditures insect index, the PCE. This is the Fed's favored measure of inflation. I think it's because it's the one that understates inflation the most. So it's why the Fed likes to look at this, because they like to understate inflation because it gives them the cover they need to print more money. Well, that's exactly what they got with this inflation. Now, do I trust these inflation numbers? No. But the Fed can always say, well, this is the data. We trust the data. We're data dependent. So if the inflation shows that it's cooling, I don't know about you. I don't feel like inflation is cooling. When I go out to eat, when I go grocery shopping, it seems more expensive than ever before. Put a 1 in the chat if you agree, right? I'd like to see how many people agree that inflation is not under control. And I mean, it's just getting ridiculous. But, the media is going to lie to you and tell you, hey, look, the inflation is coming down. And so we also got some interesting jobs data. So that's the other thing that the Fed looks at, right? They got the two mandates, price stability and maintaining full employment. Oh yeah, I'm starting to see some ones pop up in the chat there. There's a lot of inflation. It's true. That's. I mean, look, it's like the emperor's no clothes, no clothes or whatever. The emperor's naked, and everybody's just saying, look, he's fully clothed. Look at his great garments. You look at it and you say, no, it looks like he's naked. It's the same thing with inflation. They're just going to tell you, oh, inflation's improving. And I mean, it's not. Right? It's easy to see that it's not, but let's look at the jobs data. So kind of conflicting jobs data that we got this week. U.S. weekly job list claims dropped to lowest level in more than 3 years. That was yesterday. Now that did include the Thursday Thanksgiving holiday. So they're like massaging these numbers somehow to account for that. And I don't trust these numbers, but this is interesting. This is like the government uh, trying to have their cake and eat it too, in terms of what the inflation data looks like. So they can look at this number and they can say, hey, look how great the economy is. And the jobless claims are the lowest in more than 3 years. But earlier this week, we got the ADP jobs report, which showed that we dropped three. Expectations were an increase of 40, was a huge miss. So, the Fed can look at this and say, well, I guess we need to cut, and they're going to cut, right? Inflation is soft and the job market is weakening. We're going to have to cut and open the floodgates of liquidity. But then they can look at, these jobless claim numbers and they can say, oh, but we have a strong job market. So they talk out of both sides of their mouths. The one thing, is that there's a lot of money that, well, currency that's going to be printed. Let me get rid of that Thanksgiving search bar up the top. I must have been looking for that somewhere. Oh, yeah, I was looking for this line here because they were talking about how, Thanksgiving affected the calculation of this jobs report. Now talking about the Fed and fiat currency creation, this is interesting. This is from the Federal Reserve Bank of St. Louis. So, earlier I believe it was at an FOMC, Powell was talking about the end of quantitative tightening, right? The Fed announced that how the quantitative tightening, the drawdown of the Fed balance sheet is coming to an end in December. So presumably that has ended now, and the Fed is going to keep their balance sheet where it is, right around $6.5 trillion, and they're probably going to start expanding it soon. Because look at this. This is the overnight repurchase agreements. Treasury securities purchased by the Federal Reserve in the temporary open market operations. And so this is like the overnight lending facility. And you'll notice that on December 1st, the Fed pumped in $13.5 billion, second highest on the chart here, through this overnight lending facility, trying to boost liquidity. There's signs of weakness in the banking sector, and that's the real reason that the Fed is cutting. Now, I'm not a finance guy. I mean, I don't know that I fully understand the inner workings of the banking system and the Federal Reserve. I mean, they're somewhat opaque about certain aspects of it. And one thing's for sure, though, it's a system that is built on the concept of never-ending expansion of the debt mathematically is set up to fail at some point, right? And it's going to require an intervention from the Federal Reserve. And it means they're going to massively expand their balance sheet. Once again, that's what we've seen through all the previous crises. So, think about all the factors here that are playing out before us. Gold near record all-time high. We've got gold. This is the gold long-term chart. This is it's broken out from this cup and handle back in 2024. It's been on a huge rip. It's going to be hitting new record all-time highs soon. And I think, we're going to see $5,000 plus gold, but it's already near record all-time highs. You've got silver, got this massive cup and handle pattern. It's breaking out, sitting at record all-time highs. And you've got things like the executive order democratizing access to alternative assets. This is going to drive a ton of cash into silver. You have got the Fed getting ready to embark on likely record fiat currency creation. They've already ended QT. I mean, all the signs are there, right? And all along, they're going to tell you everything's fine with the economy. Even as we go into a financial crisis, they're going to say, oh, everything's strong. The dollar's strong. We're liquid. We're solvent. And, at the end of the day, we will be, because we have a printing press. But the problem is they're going to sacrifice the purchasing power of the dollar. Oh, I see. I'm coming to the chat here, and I see we have someone who says no more pennies. Do they need the copper? Well, no, it's interesting. I don't think, yeah, they do need copper to build the grid out. And, copper is also, we can take a look at that chart. This is in a accelerating parabolic uptrend. So silver is also painting a very positive picture for commodities here. And this is just like all the commodities charts. I mean, they all look incredibly bullish right now. The reason that we don't have pennies is because they've debased the dollar so much. You can't even make a penny now for a penny. It's like you pay multiple cents to make a penny because the face value has been so diminished. It's like you don't need a penny. Think about this. Think about this. I'll kind of leave you with this. This is Interesting thing to think about, though, when it comes to copper and gold and commodities. Back in the day, pre 1933, before the gold confiscation and revaluation under Roosevelt, when we actually had gold coins that circulated like in the 1920s and earlier, people were spending gold coins. And it's not quite 1 ounce, but there's $20 gold double eagle that it's got almost an ounce of gold. So just call it an ounce. It's like 0.9865, I think. But let's just talk in the terms that we understand, troy ounces. So 20 bucks and change is a troy ounce. So a penny back then, if you got your pennies together, there's 100 pennies in a dollar. So what do you need pennies to get 20 bucks? If you had 2,000 pennies, you could get an ounce of gold. So a penny back then was the smallest unit of currency that they had for the whole economy. And if you convert that to today's dollars, a penny back then in terms of gold was worth more than a dollar. I think it's like $1.35 if you do the math. But that's shows you don't need a unit as small as our current penny. Like they were getting by. You could probably just run the whole economy without any change at this point because the dollar has become so debased. Just eliminate the decimal points entirely. Just you have dollars and even increments, and the economy would probably function just fine at this point. Let me know what you think about that in the chat and in the comments down below. But the takeaway here is investors are going to want to get into commodities. I think they're already starting to wake up to it. But this bull market that's happening in silver, I mean, how often do you hear people talking about silver? Maybe a little bit now, but people are still not going out and buying silver like they were, going out buying crypto like they were going out and buying tech stocks or AI stocks. I think this is still like a stealth bull market. Maybe they bought some gold, but silver, very few people have silver, especially physical silver. So, I'm still stacking stuff like the 5 ounce Canadian maple leaf that just came out, which is over at SD Bullion Junk Silver. I think right now is a steal. On Black Friday, they were selling junk silver for under spot. That's going to change in a big way. That's how you know that mainstream investors haven't really gotten on board yet, especially in terms of physical, but that's going to change. And when it does, the premiums are going to explode at record all-time high prices. That's my forecast anyway. Not financial advice, just telling you what I think. So what am I going to do? I'm going to keep stacking. Dips, I think, are opportunities to acquire more physical metal. I've got some more silver on the way. And, I don't buy big chunks of silver at one time. Dollar cost average. That way, if it goes up, great. You buy some. If it goes down, great. You buy some for a little cheaper. That's how I have been operating. And it's, worked out pretty well so far. But I think this bull market is just getting started. So, look, keep on stacking. Hit subscribe. Check out the newsletter with the link down in the description. I sent that newsletter out about 2 days ago. I didn't have time to do a video, but I do send out newsletters sometimes, and I don't put them all in videos. So if you want to get them all, you got to sign up, click subscribe, like the video, share with your friends. Thank you very much for watching, everybody. Thanks for joining us for today's live stream. Hope you enjoyed it. Leave a comment down below to let me know what you think about all the topics we covered.